Why is gold, more specifically physical gold, no one's liability? There is no counterparty risk. A fiat dollar or banknote is a liability on a bank's balance sheet. Because physical gold is a hard asset owned exclusively by you, the only risk is your poor investment and security decisions. In this video series, we will give you 10 reasons to invest in gold. There are far more to list, but these reasons cut to the core of gold investing. To learn about all 10 reasons right now, see the link in the video description to read the full article. When weighing the cost of living, inflation, interest rates, and the ever-growing national debt, it becomes more and more challenging to know if you are meeting your retirement goals. If you think that you may be falling behind, see the link in the video description to access the free inflation retirement calculator to make sure that you are on track. Reason number 8, physical gold can't go bankrupt or default. You can always bank on physical gold because, unlike corporations or governments, it can't go bankrupt or default on its obligations. This inherent stability is one of the key reasons why gold has become a preferred store of value for over thousands of years. No matter the economic climate, the value of physical gold remains intact because it doesn't rely on a third party's ability to fulfill a promise or an obligation. When you invest in stocks or bonds, you are essentially trusting an issuing company or government to fulfill their financial obligations. If they go bankrupt or default, your investment could be worth little to nothing. Moreover, physical gold cannot be devalued by monetary policies like excessive money printing. On the contrary, gold actually benefits. It's a tangible asset that has outlived countless currencies, business cycles, market crashes, and remained a store of wealth throughout various economic upheavals. Gold's value becomes even more salient given the present rate of record deficit spending by the US government and the present debt to GDP ratio of over 120%. This unsustainable national debt of $34 trillion and rising is only amplified by the current interest rates, resulting in approximately $1 trillion owed on the interest alone. These unsustainable economic variables will inevitably result in inflation when the Federal Reserve has to monetize this debt. It's not a matter of if, it's just when. As seen throughout history, a debt crisis inevitably leads to a currency crisis. Hence, this poses the major counterparty risk to the purchasing power of the dollar, as well as keeping one's savings within the dollar. Lastly, unlike paper or digital assets, physical gold is not vulnerable to cyber threats. Often referred to as the last real form of analog money, physical gold, insured and stored securely, ensures offline access to actual money. This further enhances gold's role as a safe haven asset. Furthermore, the counterparty risk of owning gold investment products or paper gold, such as ETFs and gold certificates, will be discussed in a later video. An often used criticism to holding gold is the opportunity cost of gaining yields elsewhere, such as bonds or high-quality equities. Monetary Metals is a company that unlocks the productivity of gold by offering a yield on gold paid in gold through the company's gold fixed income investments, which aim to provide a fixed return with low risk of loss. This provides investors exposure to gold's unique attributes, plus a real yield that grows total gold ounces held. To learn more about Monetary Metals investment products, see the link in the video description. Reason number 7, gold miners are unable to boost gold output. Despite the increasing demand of gold, gold miners can't simply ramp up their production to meet this need. This might seem counterintuitive given the market forces of supply and demand. However, it's not as simple as flipping a switch. Gold mining is a complex process requiring significant capital investment, sophisticated equipment, and a skilled workforce. In this industry, the locations where gold can be mined are finite. Geological challenges and environmental concerns also limit where and how much gold can be extracted. Securing the new permits and approvals for new mining projects is a time-consuming and often unpredictable process. The 2008 credit crunch severely impacted gold producers' ability to secure financing for new projects. This financial instability hindered the ability to increase production to meet growing demand. Even as the global economy recovered, the effects linger, causing a lag in the gold mining industry's capacity to expand. Also, the resulting inflation from the COVID-19 monetary easing created ripple effects of rising costs within this energy-intensive mining sector. The ironic twist of increasing inflation benefiting the price of gold creates a simultaneous effect of stifling its discovery. These various economic ripple effects have resulted in greater scarcity of supply while the demand is only increasing. The result? Gold's increasing price. To add even greater challenges to the mining sector, due to the fact that humanity has been mining gold to various degrees over 5,000 years, all the easy deposits, in essence, are already mined. Even if greater technological innovation can keep up, Discovery of this metal will remain a challenge. Hence, the possibility of the quantity of gold becoming inflated is not likely. By extension, the possibility of your share of this asset being diluted is equally unlikely. Lastly, investment into the gold mining space has been quite scant over the last 10 years. A combination of poor budget management and failed projects has been the major Achilles heel for this industry. Furthermore, mining companies usually receive a boost financially once a firm upward swing in the price of gold has been established. Although the physical metal has seen the beginnings of a run since the beginning of 2024, this has largely been due to the mass accumulation of gold by world central banks. And central banks buy gold, not gold mining investments. The inability to boost gold's production has implications for you as an investor. The limited supply of gold, coupled with its growing demand, underpins its value. Owning physical gold and precious metals requires responsible sourcing of grades, purity, condition, best prices, and most of all, security and storage. Gold IRAs are a tax-deferred means of owning physical gold and ensuring that all these investment principles are met. We have reviewed and vetted the best gold IRA companies that meet all these requirements. See the links in the video description to access the free gold investment guides from these companies. In our next video, we will discuss numbers 5 and 6 on our list of the top 10 reasons to own gold. Be sure to like and subscribe so you don't miss it. If you have 100K of retirement savings to protect and want to take advantage of the best volume prices, see the link in the video description to sign up for the free Gold and Silver Web Conference hosted by Augusta Precious Metals. Thank you for watching.